here today for another edition of our very popular InvestNest webinar series. In this session, we're taking a look at an in-depth look at commodities and businesses with the backdrop of the Russia-Ukrainian war. My name is James Preston. I'm an anchor with Kalkine TV, and I'll be your moderator for today's event. It's a real pleasure to not have only our incredible experts with us today, but also all of you who are attending. And the goal of today's session is to provide expert insight into the impacts of the conflict in Europe. And as to how it will all work, each expert is going to give us about a 15-minute business presentation, followed by around 5 minutes of Q&As. So if you don't get your question answered at the time, don't worry about that too much. We certainly do have an option that you can then email any questions moving forward. But with that said, very, very excited for you to be here today for our official webinar, Commodities and Businesses Amid Russia-Ukraine Crisis with 3 ASX players. Now, just before we start the session, it is important that you are aware this webinar is for informational purposes only. It's not a solicitation or recommendation to buy, sell, or hold the stock of any company that is involved today or any companies that do get discussed. And of course, we are neither licensed nor qualified to provide investment advice through this platform. So just keep that in mind, all very general in nature. Now, the Russia-Ukraine war has had wide-reaching ramifications in the commodities space and also the mineral space, and that could have quite a prolonged effect. The prices of almost all commodities, including crude oil, lithium, and gold, they've all surged significantly amidst supply disruptions and the possibility of a ban on Russian companies by the Western world. We are, of course, already seeing quite a few sanctions being slapped on Russia at present. So whilst that uncertainty persists, a dynamic and focused investor actually has a few opportunities here in the crude oil and gold companies that they could potentially look to invest in. So that will be a bit of a focus for us today as well. And to help us gain further insights into these opportunities and the impacts of the war itself on the commodities and mineral space, we've got 3 ASX players who also double as Kalkine Media's respected clients, and those are QX Resources, BountyOil Gas, and Empire Resources. Now, our first speaker for today's webinar is the Executive Chairman of QX Resources, that is Mr. Maurice Felix. Maurice is a seasoned professional with over 3 decades of experience in investment markets. He began his career in 1998 as an institutional derivative broker with Macintosh Securities, which was, of course, later acquired by Merrill Lynch. He went on to serve as the head of equities at Tricom Equities and later became a founding partner of Sanlam Private Wealth, which has further honed his reputation. As for the company itself, QX Resources is a Perth-based exploration company, which has been progressing ahead on its lithium and gold projects across the country. QX Resources owns significant interests in the highly prospective tenements in the central Queensland goldfields. The company also progresses lithium-focused projects in WA. But to talk more about the company and give us an insight into the commodities space, I now throw over the virtual stage to Maurice. Maurice, take it away.
Oh, thank you, James, and thank you, Kalkine Media, for allowing us to present on this in this webinar. QX Resources currently is sitting on about 830 million shares, and we have a market cap of around $44 million. As you said earlier, we are predominantly focused on gold in Queensland and a portfolio of lithium and other metals in Western Australia. We are currently sitting on about $4 million worth of cash, and we hope to have another $1 million come in between now and the end of the year from exercising of some of the now well in the money options. We have $67.5 million still outstanding, and both of them, they're all structured around 2.5 cents. So it's about $1 million that should come in from those. We've also had about 27 odd million that have been exercised last month, so that brought in another $500,000. We have a very strong, seasoned, diverse board. Apart from myself, we also have Roger Jackson, who is our qualified geologist and has been involved in many projects around the country. Dan Smith looks after our corporate governance and finance, and Ben Jarvis, who is on a couple of other boards and also is a strategic advisor, as well as our media and PR and IR specialist. We're fortunate, as I said, with 2 main focuses, one being the Drummond Basin in Queensland, and the second being in the Pilbara region of Western Australia. We have a significant footprint of 347 square kilometres of tenure on 5 granted exploration licenses in Queensland. And we've got 215 square kilometres in the Pilbara portfolio, 2 of which are granted and 3 are currently under application. All our projects are centrally located near existing infrastructure. Our exposure is to other than gold and lithium, but we're also part of the clean energy and battery minerals. So we also have copper, tin, moly, zinc, etc. As part of our portfolio. We welcome our newest shareholder, which is Sutsu. They recently took a placement in the company, giving us $2.85 million. They are the preeminence in the global lithium world. They themselves have a 75% stake in Yimin, who have also been getting stakes in other lithium projects within Western Australia, and they are also the largest shareholder in CATL, which is the largest EV battery manufacturer in the world. They also have recently taken stakes in cornering stakes in Global Lithium, AVZ, and Pilbara Mines as well. I might actually just change the presentation and look at our gold first. We currently, QX has a 70% farm-in joint venture with Zamia Resources, which includes 4 exploration licenses in central Queensland and has 2 historical open pit mines in Belliando and Lucky Break, as well as multiple unexplored targets. There is a long history of ongoing mining within the Drummond Basin, and there's circa north of 6.5 million ounces of endowment within the basin. We are further encouraged by recent activities by some of our neighbours. Last month, Medusa acquired 100% of 1064, which is an unlisted public large gold exploration company in the southern Drummond Basin. They paid 20 million shares escrowed for 2 years. The share price at the time was 70 cents, and since then has grown to 95 cents. Also, our neighbours to the north, GBM Resources, again last month they commenced the drilling program on their highly prospective 309 Twin Hills, again which is literally borders our northern tenement on our Disney package. More recently, we had a trenching program on Big Red and Red Dog, and unfortunately, it got after our first hole, we had these massive rains back in November, and had to abort. But the first results came through with a grade of over 7 grams on the first hole. Our intention there is to go back trenching as soon as we were able to find rigs and obviously with the weather the way it's been, as long as that works, we'll be able to do another 10 trenches there. That'll be followed up by some shallow drilling, hopefully around July, and then before the end of the year, we'd like to get in and do some deeper holes before the end of the year. We continue to review our tenements and the other packages, as well as we're also pleased with the recent upgrade, the JORC upgrade on our Molly project. So that's where we're at with our golds. And then more recently, we've started acquiring and building a decent package of lithium projects. We have now 5 tenements, 2 of which have been granted, and we have 3 that are under application. The first being Turner River, 2 exploration licenses, application covering 84 square kilometres of tenure. This is 120 k's south of Port Hedland, and it's 20 k's south of the Wodgina lithium mine. Our initial reconnaissance field inspections confirmed that there was numerous pegmatites there, which we've sampled, and we've confirmed lithium and rare earth. The second package is the Western Shore. Again, 220 k's southeast of Port Hedland, and the two tenements consist of 96 kilometres, highly prospective for lithium, on our granted lease, and also we have one application. Also on the granted tenement, we have an extensive 11k strike of banded iron formation, which we're obviously keen to follow up on. And next door to us, to the north, we have Rivers Gold, and to the west we have Trek, and Atlas are to the south. 2 days ago, Rivers Gold announced some rock chips giving results of 1.5 to 2% lithium, and that's only 2 kilometres away from our package. And our third, more recent acquired tenement is the Split Rock. This is a granted exploration license at 35 kilometres, and again regionally prospective for lithium-bearing pegmatites. Again, our neighbours Calidus, 2 weeks ago, announced their Spear Hill project to the north had return assays of 2.34%. And we also have Thor to our south. We have recently completed geophysics over all the 5 tenement packages, and we're looking to firm up targets ahead of an exploration program, which we will commence soonest. We are continuing to review our portfolio and looking at future opportunities. We are well funded, and we are very excited about all our projects and look forward to updating you soon. Thank you.
Well, Morris, thanks so much for that presentation there. We do have a few questions that have popped through as well, so we'll get straight into those. Let's start with Andrew here, who says lithium carbonate prices in China have rallied to the record levels of more than 490,000 yuan per tonne. Where do you see the lithium prices in the short to medium term?
Certainly in the short to medium, you'd have to think that they're staying where they are, and I would have thought, certainly in the short term. In the longer term, I would have thought they would, probably peter a little bit from where they are now. Clearly, with all the what's going on in the world at the moment, all commodities are at or near record highs. You don't know how long they can hang around for, or they continue to go higher up, depending upon how long these issues last and how short we are going to be of all the commodities. But I mean, you've got certainly a lot of infrastructure, new infrastructure demand, with all of the US demands, as well as I guess there's a bit of rebuilding going in the Ukraine as well. So all will help.
Well, Morris, let's say hypothetically the conflict dies down within, say, the next month or so. We know there's been a few talks between Putin and also Zelensky. Will there still be sort of a prolonged flow-on effect of the things that have already occurred, in your opinion, or do you think it should go back to normal pretty quickly in terms of prices and supply chains and those kind of things?
Well, it really does depend on how quickly they can resolve and to what extent that resolve is. I mean, that's the big question, isn't it?
Absolutely. All right. Well, let's move on to a question here from Nick, who says, recently QX Resources welcomed Suzo TA&A as a strategic partner and cornerstone investor. What does this partnership mean for the two companies?
Well, I sort of touched on it in the presentation. It's probably one of the best cornerstone investors that you could ask for. Certainly gives us a huge vindication of the package of lithium projects that we've picked up today. It's certainly the smallest investment that they've made in the market, or earliest stage investment that they've made in the lithium market. They've written a huge check out for AVZ very recently. They've popped up in GL1, and whenever they've invested in something, the share prices have gone. They're long-termers. I mean, they first started investing in AVZ, I think, at 4 cents. The ERL was in the 30s when they first started. When they started with the stock. So I think it's a win-win for us, and hopefully, whatever we start to extract out of the ground, we'll have that as off-take agreement with them as well. So it certainly alleviates a lot of the future pressures that we may have, which we may have had.
Let's move on to Mark's question here. When can we expect the drilling to be conducted at the Turner River Lithium project?
I did say that we are currently evaluating all the data that we have on all 5 tenements, and as soon as we've finalised the target, we'll be moving in. We're certainly going to be going in the next, I think it's within the next 2 to 4 weeks. We'll have some guys on the ground.
Wonderful. Maurice, if we can just get you to make sure that you're facing directly to the camera, because we're getting a bit of an audio feed issue when you do turn to the other way. But we got a couple more questions here as well. One from Sandra, who says, QX Resources has been bolstering its lithium portfolio. What is the company's vision for lithium and other commodities overall?
That's a good question. Well, obviously we like the commodities, and we're looking forward to continually review and expand the portfolio if we can.
Terrific, short and sweet. I like it. That's a good key focus of what you're doing there at QX. And final question here from Susan. High-grade gold mineralization was intersected at Red Dog during the recent trenching program. How significant is the potential opportunity, and how soon can we expect the maiden resources for the gold projects?
Again, based on the work that we've found purely from trenching. Trenching is less than a metre of depth. So this is virtually at surface. We're getting some pretty exciting gold numbers, and also the fact that we're getting, or not we, but GBM are getting some very good stuff on to the north of us. They're very keen to get into production on their front, and one of our main focuses is we want to get our resources up to a level that potentially would be be able to start talking about it being a production story if in the next sort of 2 to 3 years.
Terrific. Look, it sounds like you're doing some wonderful things with QX Resources, and Maurice, thank you so much for delivering that presentation, answering those questions for us.
No worries. Thank you, James.
Thank you very much. Now, for our attendees, if you didn't get your question answered just then, or maybe you've thought of a late one, you can still ask Maurice whatever you might like to know about QX Resources. To do that, just drop us an email, info@kalkinemedia.com. But let's keep moving forward now. Let's go to our second speaker, Kane Marshall, the Chief Operating Officer at BountyOil Gas. Kane is a petroleum reservoir engineer and geologist with over 20 years of experience in various roles as a director, geologist, and of course also as a petroleum engineer. Now, previously, he served as the managing director of Key Petroleum Limited and was also a non-executive director of Hawkley Oil and Gas Limited. As for Bounty itself, though, BountyOil Gas NL is an independent Australian oil and gas explorer and producer of premium operating and exploration assets across globally renowned basins, such as the Carnarvon, Cooper, Surat, and Sydney basins. Bounty came into existence in 1999 before going public on the ASX in 2002. And to talk about the growth of the company since then, and of course, provide an overview of opportunities for investors in the present climate, I'll now throw it over to Kane. Kane, the floor is all yours.
Thanks, James. Thanks, James, for the introduction. And I have to say, it's an exciting time to be talking to the participants, particularly after, I think, almost 13% of our capital structure changed hands yesterday. I think it was about 170 million shares traded hands between Chi-X and and the ASX, obviously off the back of a major oil discovery by Carnarvon and Santos, where we've got a first mover advantage in the shallow water Carnarvon Basin, and that's obviously in the papers and the media today. So it's a perfect time to talk about the Bounty story, and particularly the context of what is happening in Russia, its economy, its position as a major supplier of crude oil. It is the number one, oil reserves country of any other country above Saudi Arabia, and how the current conflict is impacting on the commodity markets, and where we see the niche opportunities we see in the domestic market, and what our plans are basically, which is nice and simple. We're a company that turns over production revenue. We're one of the very few domestic oil and gas juniors that has production, with plans to not only increase production, but drill big targets offshore adjacent to the major companies, a lot of which have actually decided that during the downturn to stop exploration altogether. And now we're seeing that that is a major part of the supply crunch crude oil market. So fantastic timing by us, opportunistic, but also we had the vision 12 months ago. We could see a lot of these things cascading into a perfect storm. So just on that theme, just go to the next slide. I'll keep this fairly simple for the participants. That first slide. So it's not a surprise to viewers, oil prices have surged to 14-year highs, above $100 a barrel, depending on it's Brent or TAPIS WTI. We're seeing a lot of the Western countries urging the OPEC cartel, including Saudi Arabia, to increase output to try and meet the increasing demands of global oil consumption. It is a strategic resource. The energy transition is not going to be happening overnight, particularly when we factor in conflict and the requirements for fuel and food in conflict, and the fact that at the moment we've only got spare capacity around 2 million barrels a day, which is not significant to deal with what's happening geopolitically, what is happening in domestic markets, both in terms of fuel consumption required to keep the economy ticking over. We've seen what's been going on in Western Europe with gas prices going through the roof, as Western Europe has become largely dependent on Russian gas. And so it's no surprise to me that Putin has made this move. And we're ideally positioned now that we're in this position, and that's reflected in what hedge fund managers have been doing over the last 12 months. They're still net long on contracts. The oil price, as we can see, it's very obvious in that bottom chart there that it's only gone one way. And as I'll talk about a little bit more, I think it's only going to continue to go that way, which is good for the industry. It's good for us, but there's also repercussions to the overall economy in relation to inflation, the knock-on effects to supply chains, cost of goods, and all those sorts of things. And sadly, the Australian government has really dropped the ball in putting itself in a vulnerable position, not only in terms of conflict, but being able to keep a control on prices domestically. And a lot of the refineries have shut down over the last few years. There's been no investment. And if you're able to stay in the game long enough and have your cards at the table, now you can cash in. And really, we see a lot of opportunity. It's a very exciting time. So that's our position. We also see, the OPEC cartel, various national oil companies gaining more control over supply. We're seeing not only the ESG focus, green activism, but we're seeing a lot of the national oil companies are going to gain more control of that supply, be it, Petronas in Malaysia, the Iranian National Oil Company, the Saudis. Obviously, the Russians are a major play here through Gazprom and Rosneft, and participants have seen what's been happening with Shell and BP, and probably the renationalisation of assets, similar to what happened in the Venezuelan crisis many years ago when ConocoPhillips and the other American majors basically had their assets stolen. So having a domestic focusing on oil and gas production in the interest of national security is, I think, a very smart and simple strategy that I think investors understand. And, having a cash position of $3 million with increasing revenue, relatively light capital structure, exciting in relation to the technicals and the charts and the stock about to break out, I think, it's just going to be more good news over the next 12 months for shareholders. So just on that theme, in relation to crude and Russian crude, Russia is one of the major contributors to crude oil to the US. I don't know whether a lot of people know that, but that's why there's been stuff in the media over the last week we've seen. The bottom line is that countries are reliant on Russian crude or gas for that matter. And we've seen Germany and the defense minister come out the last 24 hours saying, look, we just simply need these hydrocarbons from Russia. That's our position. I think India is fairly ambivalent. And US is sort of really putting itself in quite a vulnerable position. We saw the shale revolution, which saw a lot of drilling and fracking, putting a lot of supply in the market. America became a major swing producer to the overall commodity market in this space. But as that's been recurring, a lot of the sweet spots have effectively been drilled out. And as we've seen the last 2 or 3 years before the oil spike, and we had deflated oil prices, we had negative WTI contracts, there was very much a focus on capital discipline by these companies and those note holders and those debt issuers saying, look, we need to focus on return on capital. So there's been a capital discipline effect. So our view is that we're going to start to see a lot of American oil and gas companies redeploy risk capital internationally to domains which don't have a lot of sovereign risk. Australia obviously is one of those, and we've already seen EOG Resources move into this space when it bought Melbana's acreage in the Bonaparte. Actually seeing them on Saturday. They're probably looking to increase their spread in Australia. It's always one of those things where we see the Americans, they come and go, and we haven't seen them for a while, and they're one of the ones that will come out, be aggressive with exploration programs and look to drill ready things. And I think that we're in the perfect place in relation to Cerberus. So how does this all affect Australia? Well, we're very much reliant on diesel. We are a big country. We do not have electric charging stations all around the country. That's the reality. It will come one day. Mining is heavily reliant on diesel. The mining costs are going to be reflected in these increasing commodity costs, which have a knock-on effect to the other commodities. Gold, copper, all those sorts of things. We've already seen the US, seeing that chart. It's very obvious what's happened to inventories. It's becoming a real problem in terms of prices at the bowser in the US. We're currently in March, so we're coming out of a winter, which is one good thing. It's good and bad. We're going into the summer season in the United States. People start driving more if they can afford it. So affordable petrol is going to be an issue, and whether that cascades into recessionary type effects is going to be interesting to see how it plays out. We're obviously resource rich. We can see what's happening here. We're in a position to explore for crude in the Surat, which is a very good quality crude, which we can refine to diesel. There's an Eromanga refinery there. We've got shallow water acreage that's highly prospective for oil, adjacent to Santos and infrastructure. So keeping it very simple, and maintaining that this is a low sovereign risk jurisdiction. We have quality assets. We have revenue. We have supportive shareholders, including institutional shareholders, who have bought in this story over the last 3 or 4 months as we're transitioning to a growth phase. And basically, as a summary, we see further oil price spikes, particularly if there's further embargoes. Various Western governments are going to have to think very carefully about how they treat Russia. We are very much isolated in Australia. We are very vulnerable to conflict. The Chinese know this. We have the lowest OECD fuel supplies, I think, of any country, which I think is about 21 days. We have strategic fuel supply reserves, if you like, in the United States, which was, I think, executed by Angus Taylor last year. But really, at the end of the day, we need to become reliant on our own domestic production We need energy security. That's reflected in gas prices on the East Coast, which a lot of your viewers have experienced firsthand, and prices at the bowser. So we have a anti-fossil fuel movement. I think the sentiment is going to change. When the lights go out and people paying more at the bowser, then that's when things change. So it's very simple. We're focused on the domestic supply. We've seen refineries close. We're reliant on foreign fuel imports. That has to change. And I think, just on that note, it's really, having a peer in our space is very difficult on the ASX. I'm not too sure who our peers are in relation to domestic oil production, focused on drilling big targets. Major shareholders and the board all completely aligned, going in one direction, and getting enough liquidity in the stock. People getting familiar with the story. I'd say, we're going to see another leg up in the stock or more news. And, as we get closer to drilling, I think it'll really re-rate. So that's a simple story. I think people like the story, and we're slowly getting that story out to the market.
Okay, and thank you so much for that presentation. Really interesting you mentioned there as well that Australia is quite susceptible to the potential attacks from the likes of China, and obviously there's been a few interesting developments recently, whether it be the interim trade deal they're working on between Australia and India. There's obviously been a lot of discussion with NATO. I want to ask this question for you, because obviously we know the current European conflict is causing havoc with commodity prices across the globe. Let's say China does decide to get further aggressive and takes on Taiwan, for example. How much of a direct impact will that have on our economy?
Look, I think it's on the cards, right? So I've been saying now for 3 months, I think that's the next move. What's that going to do? Markets will get the jitters. It's going to create more jitters in this particular commodity space. We're going to have to start seriously thinking about fuel security. We may start to see, depending on timing, I think the government's going to have to start very hard thinking about policy, energy security. They're talking about all these hydrogen incentives and things. That's fine, but when it comes to moving people around a country and keeping the economy going, you need fuel. And there's been no investment in either infrastructure in terms of refineries or incentives to explore and develop hydrocarbons. So I think long the short of it is this, that it will be good for us and maybe not so good for the economy. But I think that the risk capital will still be out there to fund oil and gas exploration companies to address that issue. It's been an issue for a while. There's been various white papers on energy security over the last few years, but it just hasn't been front and center as a main issue because of the politics around it. But when it's a political issue, that's when you start to see, things change. So I think it's going to be just another thing that's going to create more oil spikes. If you're a producer like us, it's just going to make us more money. It's going to be easier to get investment. All the things that have been a real headwind for us over the last, say, 6 or 7 years.
Really interesting as well. I mean, obviously the election coming up in May, and yet neither side of the aisle has really focused much on this issue about refineries and petrol prices. It's just more been press conferences as opposed to actual policy or promising within the budget.
That's exactly right. I think they want to stay away from the issue. I think there's a battle on the, for the middle, I suppose, if you like, particularly younger people and their attitudes towards the fossil fuel industry. I think there's a lack of understanding that fossil fuels actually, I can't remember the percentage that go into electric cars, solar panels and wind farms, is a lot. And that's great. We can go that way and you can have policy for that, but it is still a transition. And to get to that point, you do need this industry. And at the moment, it's not a political issue. So it's not really being, a feather in the cap of either side of politics to come out and have policy about it, because it can be turned that you've got an issue with climate change or whatever. So the politics are delicate, but it will become a political issue, I have no doubt. And it'll be interesting to see what's going to play out, I think, in the next 1 to 2 years and closer to the next election.
But you're 100% right that it is a transition. You look at the struggles in South Australia recently, for example, with having to then bring in, a giant battery from Elon Musk because of the reliance on solar, and then that fails. So, I mean, look, it's going to be a long-term thing. But let's get into some of these questions here as well that have popped through during your presentation. We'll start with Josh, who says, what is Bounty's medium to long-term vision for its Cerberus project?
Medium-term plans, we mature this to drilling stage. So we are well advanced in that respect. We've just got back some tender inquiries in the last week. So we know what's available. We're talking to the other operators. So our medium-term plans are, when can we mature that to drilling? And that's largely dependent on, your government approvals, and particularly environmental approvals, which is very strenuous and can be quite lengthy. Having said that, we sort of got the ball rolling on that before Christmas. So medium term, focusing on getting the approvals in place for drilling, getting the rest of the funding in place, various mechanisms for that. It can be joint ventured up by one or two companies or syndicated, or, farmed out. I don't think it's going to be an issue in this market at $100 oil when we're looking at 102 million barrel prospects next to Varanus Island infrastructure. Longer term, execute, drill the wells, and obviously, there's a lot of running room and upside left in the Cerberus acreage. So you just need to have one discovery and it materially changes the whole game. Ted Jacobson, who these assets were his privately, and having discussions with him, he was, although he's been sick with Parkinson's, he just said, I took Carnarvon from 1 to 80 cents off the back of Dorado. Tap Oil, I did the same. I think we can do the same thing with Bountycane. We've got the right assets, right environment, investments now coming back into the sector, very few people exploring. And so that's the longer term view. I think that's where we want to be. We're a junior. We want to move into that mid-cap space where there's been a void for a very, very long time. You get AWE, various other companies. It's been a real struggle from being a junior to mid-cap to, a Beach or Santos, or All Search. All Search is now gone. So there's a space to be filled there. And I think that we're one of the few that's really sort of thinking long-term, that's where we should be going. And I think shareholders and investors would be looking at that as well. Where should we put our money, and which companies' strategy and themes resonate with me? So that's the long and the short of the medium and longer term in terms of the Cerberus acreage.
Yeah, big future lined up, that is for sure. Now, this is a little bit of a similar question to the one that Morris received, but this one's from Sandra. Do you see higher oil prices persisting after the conclusion of the Russia-Ukraine war? Of course, we don't know when that will be, but is that a likely effect of that conflict?
I think longer term, speaking with a lot of people and just looking at what's happening in terms of supply, demand, investment, it's looking like this is going to be going on a while. There's just simply been no investment in exploration development, either in deep water off the shelf, shallow water, even onshore. I just talked about the capital discipline around, the shale revolution and what's going on in the United States. This is an industry where you find a discovery, it could take 5 to 10 years to bring that online. So you're going to end up with a phase here where commodity markets are playing catch up to deal with consumption and demand of all these domestic or global economy. So it's not just going to be a magic solution to turn on the tap out of Saudi Arabia and fill the void. A lot of those fields are depleting. The sweet spots in America have been drilled out now. The Russian thing, I don't know what's going to happen there. They are a big supplier of crude. There's a black market going on at the moment to try and get that crude sold to China and various places. I just cannot see where the supply is going to come from. And that's why various institutions are saying $200 oil in the short term. But the longer term, if it's over $100 oil and the exchange rate's where it is, and you can't make money, there's something wrong with it. So that's where I see it's where it's going.
Yeah, it's incredible. I mean, we're sitting at more than $120 US a barrel at the moment. You look back to to what, 18 months ago, and they were having to give it away, and yet there was
no one wanted to talk to you. That's right. No one wanted to talk to you. It's completely changed, and that's why you got to be ready when it does change. Because when it changes, it happens very quickly, and you've got to be able to move fast, like us as a junior, and capitalise on that opportunity, because it could change very quickly. I think this time around, it's not going to be as quick a turnaround back the other way. I still think we're going to have, even if oil's above $70, you're still making plenty of money. And if you can't, there's something wrong with you.
Absolutely. Now, a question here from Sam Petroda, who says, how do you see the impact of the ongoing Russia-Ukraine war on Bounties business streams and revenue guidance for the current financial year?
Yeah, so that's the first part of it in terms of impacting the business. What we're seeing is the biggest part of the business being affected right now. It's tied with the pandemic as well. As we're seeing that there's a major issue, and Morris was talking about his projects, is that there's a real issue in the supply chain of getting raw materials for casing and tubulars for our drilling program. So that's pandemic related. Obviously, the Russian conflict, that's not helping the situation. It's affecting the business in the sense of higher commodity prices and more uncertainty and risk. So that's sort of the first part of the question. The second question is, well, it's going to affect our revenue because we're just going to be making more money, because obviously there's more conflict, there's more uncertainty. Two things: equity markets hate uncertainty. Everyone wants to move in defensive assets, but if you've got a commodity spike like this, people will want to take advantage of that. They want to invest in companies. So I think it affects us in revenue. Higher commodity prices, means more revenue, but also we're going to be affected by the margins in relation to particular raw materials and what we need for our revenue operations. So it's not a straightforward thing, but I think if anything, it helps us while there's still uncertainty and conflict. If it all calms down, it could have the reverse effect, but that doesn't look like that's happening anytime soon.
Well, Kane, we'll go with one final question here, and we'll unfortunately have to leave Chris's for another time because we do have to keep moving forward.
Yep, sure.
From one of our anonymous attendees, they're asking, how soon can we expect the Surat Basin assets to commence production?
Yeah, I think people will see something on that in the next week or two. We are aggressively looking to increase production. So it's no secret that we have other assets in the portfolio. I've been charged with what that looks like in terms of CapEx and how we would fund that. And that doesn't have to be funded through the capital structure. They're not expensive things to bring back online. So we indicatively are talking around 300 grand or more a month in revenue, and we're looking to double or triple that in the next 12 months by bringing one or more 2 fields online. So you're not talking out of school or anything, but we're certainly going to be having to disclose to the market our plans around that. And I think it's a perfect time to do that. We'll be re-rated as a producer, and we're already being re-rated as an explorer, and it's a very good position to be in, and it's not something a lot of the juniors actually are exposed to.
No, it certainly is a very unique timeline that you're operating within, and that will in turn provide you a few opportunities that otherwise might not have been there. But Kane, thank you so very much for answering those questions and for the presentation today.
Pleasure. Thank you very much.
Well, that is Kane Marshall. And of course, if you missed out on any questions there, including you, Chris, well, all you have to do is, of course, head across to your emails, drop us a line, info@kalkinemedia.com. We'll make sure that gets across to Kane. Right, let's move on to our final speaker for this InvestNest webinar edition. That is, of course, the Managing Director of Empire Resources Limited, Mr. Sean Richardson. Now, Sean has got more than 25 years of experience in the minerals industry in operations, consultancy, and managerial roles, working across Australia and also internationally. Now, he's previously been engaged with mineral projects in North America, Africa, and both Southeast and Central Asia, holding senior management positions for a number of ASX companies, including Bardock Gold, Northwest Nickel, Apex Minerals, Shaw River Manganese, Atlas Iron, and also Orocup Resources, just about everything you can even throw a stick at. In other words, he's a very, very experienced man. And of course, the company itself is a gold and copper focused explorer and developer that is Empire Resources. They own some highly prospective projects in WA. Empire has marked significant advances through the recent exploration work, as well as expansion in project portfolio. And Empire owns multiple highly prospective exploration projects, which could, of course, reap huge dividends. So to talk a little bit more about them and the current climate that we find ourselves in more broadly in terms of the commodity space, I'll now throw it over to you, Sean. Welcome to Kalkine.
Thanks, James. An excellent summary, mate. That was very good. Thanks. Okay, so yeah, James, a very good introduction to Empire. We've got some highly prospective ground, and we do target copper and gold, and we see that those two minerals have a very long potential for a very long-winded build-up in valuation going forward. Copper's running around $10,000 a tonne, as I think Kane highlighted very eloquently that energy security is going to be a common theme going forward. So we're keen to be a part of that in terms of our copper exploration and development. Can't transport electricity without it. So we're looking to improve our portfolio in that area. So I'll just see if we can move forward my slide deck. Here we go. Usual disclaimer. So I'd like to really just run through Empire's projects and our business itself, and I'll take some questions at the end on the impact of the current conflict and global geopolitical risk in and around our commodities that we see. So a few highlights. Empire's really reinvigorated its exploration activities over the last few years. We've recently completed some diamond drilling at our flagship Eel Mary project. Those assays are in the lab. Some of those assays have been received, and we'll start seeing the rest of those assays flow through next month and into May. Our project portfolio has really expanded in the last few years. We currently hold about 452 square kilometres with another 418 square kilometres in application. Constantly looking at new projects, constantly looking to improve the portfolio. And in that light, brought two projects on recently, the Nanity Copper Gold Project, which is east of Meekatharra, and Meekatharra itself, which is a small gold exploration play that we picked up late last year. So our workload has really increased significantly, but we've built the team to be able to work through that in a pretty systematic fashion and hopefully generate some really strong news flow from those exploration plays. In terms of our balance sheet, very healthy at the moment. As at 11th of March, when I put this presentation together, it was $2.9 million of cash with zero debt. Have a very strong shareholder support, as seen in the recent capital raise we did late last year and closed off the shortfall earlier this year. Puts us in a really strong position to be able to execute those exploration plans that we wish to embark on over the next 12 and 18 months. Investor dashboard, I won't go too much through that other than to highlight the outstanding value proposition of Empire. Current market capitalisation at the 1 cent range at around 10 million, and in my opinion, a very good opportunity and plenty of value to be uncovered there. I'd like to start the presentation off with a bit of a highlight of our investment portfolio. We do have investments and have had investments in the past. Our current portfolio is restricted just to the Penny's Find gold mine royalty, which is a 5% net smelter royalty for the high-grade Penny's Find gold mine, which is just east of Kalgoorlie. Open pit production, which is that image on the right-hand side there, has been completed, and that produced 18,000 ounces at about 4.47. So it's certainly a high-grade open pit mine, and it reflected in the underground resource of 42,000 ounces at 5.22 grams. Horizon Minerals is the operator and owner of that particular project, and they've been working that towards production. recently completed a drill out and resource update, have committed to undertaking infill and extensional drilling of that, and our understanding is that that's fully permitted with toll milling execution agreements in place, and really just on the cups of production. So we'll be looking at watching that development very closely, and expecting to see revenues from that project soon after execution. So the Empire project portfolio is very much focused in Western Australia in the Greenfields belts. We have 4 main projects: Uameri, which is gold, copper, nickel, cobalt, and a bit of a splash of PGMs just to round out the elements. Nanity project, which is a pure copper gold east of Meekatharra. Barlawiri project, which is a really interesting zinc, lead, silver, gold, and a few other elements in there as well, west of Kew. And finally, the Penny's Gold project in just out of Kalgoorlie. So I'll run through each one of those very briefly and leave a bit of room for discussion at the end. I'll just hit some high notes there. Uameri project, flagship project, is a very large synclinal structure, has an existing JORC compliant resource of 2.5 million tonnes in the just desserts asset. We have committed to exploring a lot of those other target areas that you can see on that screen there. There's something like 26 prospects. All of a large number of those have been untested, and all of those prospects have not been readily drill tested below 75 metres. A large historical database has been developed, and we've estimated that only 10% of the historical drilling is below 75 metres vertical. So there's a lot of smoke in the area, a lot of mineralisation, and plenty of targets to be drilled to depth. Honing in on that, we're really focused on the southern area there. There's a number of prospects in that southern synclinal fold. I'll just focus on 3 of those: Smith's Well, Waitio 1, and A Zone. Smith's Well is where we've been putting a lot of our effort. We've seen a lot of disseminated massive sulfides come up in the drilling. It's extensive copper, nickel, cobalt mineralisation, and it's a open long strike and down plunge. And we recently completed a diamond drilling program at Smith's Well, in where we returned a 30-metre massive disseminated sulfide intercept, and received some of those assays back. Very encouraging numbers. The width and the grade tenor is increasing in that particular prospect. We're currently doing some downhole electromagnetic surveys to be able to target our next drilling. That allows us to map out where the sulfide conductors are trending, and allow us to target our drilling a little bit more scientifically and in future programs. So as I mentioned, a recent intercept of 30 metres has really put a lot of focus on this asset for us. Preliminary assays of that 30 metres, we put 17.6 metres into the lab and returned 0.7 copper, 0.2 nickel, and 0.04 cobalt across that whole intercept, with some high grade 2%ers and 1% copper in there. Petrographic studies underway to understand a bit more about the mineral energy and improve our targeting, drill targeting going forward. The next asset at Uameri of significance for us is the Waitio 1 prospect. It was identified in 2019 from some air core drilling that we undertook, highlighted a pretty strong anomalism in the regolith, which we've tracked down. Very wide structure, lots of sulfide in the system, and recently we identified that there was a palladium platinum element to that asset as well. So we're targeting that as to be a copper nickel with plus or minus PGEs, and recent drilling completed in January. Assays outstanding, so we're waiting for that to come in. Very keen to see that come in and those assays come in and help us target that next round of drilling there. So we're pretty excited about that asset. It looks quite like a large system that we warranted and does warrant a lot of extra work. Very early days for that asset there. An historic asset, it's A zone. It's only 1.3 kilometres long strike from Just Research, which was the 2.5 million tonne resource. Historical intercepts, very good, 12 metres at 2% copper, 19 metres at 1.9, 7 metres at 3.2. There's a lot of metal in that little system there, and has had limited exploration since 2011. And we've recently undertook a small drill program in late 2021, which confirmed the mineralisation dip and strike, and has allowed us to plan future RC drilling holes programs for this year. So that's a very brief tour of you and Mary. I'll jump very quickly to Nannity. We picked this project up last year in a tenement application process, so a cheap acquisition. It's proximal to Cyprian's Nannity well resource, which is a 36 million tonne, 0.4 copper resource that they've got there. It's only, as you can see on the right there, the mapping is complete, and we've undertaken some target generation and geophysical reviews, and also completed a site of soils program in late last year to try and understand a bit more about the area that we're operating in, and that's given us some strong priority areas to target. There are some there are some weak conductors, bedrock conductors associated with the mapped geology and also the excellent soils results we received. So we are very keen to be into Nannity and undertaking some more work there, including drilling into this year. So watch this space around there. That's never had any exploration of any note, and we'll be keen to be the first boots on ground and really explore that little project. Third project in our portfolio is the Barlawiri project, 150 k's west of Kew. No exploration in this area since 1987, and there is some really strong mineralisation in this whole system. This graphic that we have on the right hand side shows some diamond drilling that was undertaken in the late 80s. Some really interesting grades there. The depth's quite shallow, and we are very keen to be getting into that project as soon as we can. We've completed field mapping and waiting on the results of that, and we'll be back in the field there this year to continue to progress that little project along, and hopefully we can uncover the mysteries of Barlawiri. And final project that I'll talk about today in the portfolio is gold. You have to have gold in your portfolio. I think it's a great commodity to be in. It does work a lot. It does very well in obviously these geopolitical environments. And we're no stranger to gold, having mined the Pennies mine in 2018. We sold it for the royalty that we hold, the 5% royalty, and retained all the exploration ground around that. So we'll be watching what Horizon does with their drilling to understand what is happening with the trend into our ground. And we're only talking a few hundred metres away, so we'll be watching there. And that's the PF12 as a target you see on your screen on the right hand side. Notwithstanding that we have a strong focus around the Peats Fine Gold Mine, we also do have some targets that we would like to be following up this year as well. The PF09 is a gold supergene target that we identified in 2019 with some aircore drilling. We've followed that up recently with some RC, and we can see that there's certainly mineralisation into the bedrock. And that supergene target's quite extensive. At the moment, we've identified it to be at least 500, 400 metres long and 250 metres wide. We need to track that supergene to its limits and then determine where and if the bedrock mineralisation host comes through that and leaves that supergene out. So watch the space on that. We'll be looking to get into there as I said this year. And similarly with a little target called PF09, arsenic supergene plume, which is pretty consistent with Kalgoorlie mineralisation, arsenic to gold ratios, well known, and recent drilling has confirmed the mineralisation. We do need to do a lot more work in this asset to understand this prospect, understand where the bedrock mineralisation is running to, and again, more plans for more drilling, RC drilling in the future. I'll keep it fairly short and sweet. In summary, the Empire's got an excellent package of exploration projects. We are multi-commodity, although we do focus on copper and gold. If the assets are throwing up other elements, we'll certainly target those elements and try to understand what the value proposition is with those elements. We're across the greenfields right through to brownfields, including JORC resources, and we have active exploration, continuous news flow, strong financial position, excellent team. We've got a strong board, very encouraging and very committed to development of Empire. The exploration team is also very committed to what they do, and they've shown and demonstrated that they can deliver exploration packages and programs on time, on budget, and target the mineralisation that we want to be targeting. And that is pretty much it. I'll pass it back to, stop the share, pass it back to James, and wait your questions.
Thanks very much for that, Sean. Very interesting stuff, mate. The Ewan Mary project in particular, obviously there was a few dates that you threw around there. There's been some exploration that's been going on since 2011. YT1 you've been involved with since 2019. How long do you think that project has in terms of a realistic, I suppose, ongoing life form for you guys to continue doing exploration and keep producing materials from that region?
Yeah, look, it's early days for the Ewan Mary project in a sense, in that there needs to be a lot more exploration to prove up resources and try and develop this into a producing asset. There's no doubt that JORC resource, existing JORC resource, is economically viable under certain conditions. So the challenge for Ewan Mary is to generate further resources and develop that asset further into towards production. So you won't hear me talking about production because it's not on the radar. We need to develop those assets and develop those resources. A small company like Empire taking on a big asset in these VMS or orogenic type assets does take a lot of work and a lot of effort. But look, the results have been very encouraging. YTO1 it's 3 years since discovery, and some of these assets can take a lot longer to get to this point. I think we've progressed it fairly rapidly through the system, and as we see good results, we'll start to see step out drilling and more intense drilling programs too. So that's generally the life cycle of these things. Is once you've got the confidence that you're onto something that's of significance, then you'll spread a long strike and start investing in drill rigs being out there, not campaign style, but continuous drilling campaigns. So yeah, so to answer the question, very difficult. It really depends on what the drill rig's throwing up.
Absolutely. All right, well, let's head across to some of the questions that have come through during your presentation. We'll start with Leslie, who says, "Hi, Sean, really insightful session there. I'm trying to find if Empire has any plans to diversify its exploration portfolio into other metals except gold and copper, given the recent skyrocketing commodity prices."
Well, it's an excellent question. And look, we're constantly approaching and constantly looking at packages and opportunities. So we're not afraid, or we're not sort of wedded simply to copper and gold. We've pegged ourselves to copper and gold because it's a pretty simple value proposition. And in that, gold, you don't have to explain to anyone really what gold does, and similar with copper. But copper is and Kane sort of touched on the energy security issues that we're going through at the moment. Copper is the single commodity that transcends all technologies, whether you're into battery thematics or network energy generation, or EVs. It's a simple equation. Copper is the element that transcends all those technologies and those markets. So to be in copper is a great place to be. And I think the pricing of copper has come up significantly, and I think that shows and demonstrates that the world supply and the world demand for copper is going to increase significantly over the next decade or so. So copper is really good, really great, love it. I think it's a great commodity to be in. Prices have been really strong and maintained a steady state of strength over the last few months, and so that demonstrates the viability, or our rationale behind it. But to answer that question directly, look, we'll look at metals in any form, so long as the projects make sense and the commodities make sense to us, and jurisdictional risk is not outrageous, and the geological risk is managed. We can target any metal that we see fit. Certainly been across a number of metals in my career, and certainly our team is also not just focused on one metal. So to answer the question, yep, look at anything as long as it makes sense.
Terrific. Let's move across to Andrew's question here. He says, "Hi, Sean. Past year has been a good one for Empire Resources with major developmental milestones achieved. In the current year too, Ewan Merry project has delivered excellent results from drilling. What have been the key enablers for Empire throughout this journey?"
Yeah, it's a good answer, a good question from Andrew there. I think it harks back to where we've come from as a business. There's no denying that we've been through a bit of pain in the latter part of the 2010s, I suppose we call it now. So into 2019 and 2020, we spent a lot of time working on our business, trying to improve its viability and strength, and we've created ourselves a robust business. So from there, we've moved to building our exploration function again. We've recruited well. We've built up a good portfolio of targets. We've got a lot of drilling in front of us, and that sort of allows us to snowball. That effect is to be able to generate news flow for investors so that they can see that we are doing what we say we want to do, and that also helps us attract the right people to the business so that we can execute programs in a timely fashion. And I think that's starting to really come to fruition now, and this year we hope to improve on that. So I mean, to throw out some statistics, we've been drilling around about 12,500 metres a year for the last couple of years, and we look to ramp that up over the next 12, 18 months and really start targeting and becoming a serious exploration company.
Sure, another question here from Sam Petrota, who's been very busy today with us. He says, "Seems like the ongoing year will be incredibly important for Empire. While I extend my best wishes to the team engaged in project development at Empire, I would like to talk about the company's plan for the current year."
Yeah, good question, Sam. Thanks. Current plans for the year, we're focused on trying to get back into Ewan Merry. I think both our panelists have also identified that supply is crucial and critical and has been lacking. And that's people, materials, and just trying to get access to those services. So we work actively with our drilling companies to be able to plan and execute our drilling campaigns. We're an exploration company, so that's where we want to be in the field, drilling holes in the ground. So downhole geophysics at Smith's Well at the moment, that will allow us to hone in on our targets. The assays will be back in April and May. So we'd like to be back in Smith's Well in the middle of the year, continuing that good work there, and also following up some of those targets at YTO1. So certainly a strong focus for us is to back up the urinary drilling in the middle of the year, subject to rig availability, etc. And then I think I'd like to have another decent couple of exploration programs, whether they're drilling or soil sampling programs, at two of our other assets. I think Kalgoorlie, Penny's Find, is a great target. We've got some really good work to do there. We'd like to be back in there in the second half with the air core rig. I think that's probably the right choice there. And then it's between Nanity and Barlawiri, and we've just finished the mapping at Barlawiri, so that should allow us to target some soils programs. But equally, Nanity could use some more infill soils and potentially an air core program as well. So talking to the air core drilling companies, and they're all very, very busy, which is understandable, and quite often you have to get in line or deal with a lot of people and just try and uncover those opportunities. It might be a 2-week program that comes up or availability that comes up that we just need to roll out and do it. So this year, exploration is the name of the game, and 3 exploration programs, including the one that we've already done. Oh, sorry, not including the one that we've already done. I think 4 exploration programs is about right for where we are as a business. And then continue the business development. So that's the other part of our core offering.
Yeah, look, it's an incredibly important point. You don't want to overextend yourself and try and expand too quickly and then find that you can't keep up with the demand of all the various projects that you've got. So very good point there about knowing, I guess, the limitations of where Empire is currently at. A couple more questions with you as well, Sean. We'll just go 2 more. Let's go to an anonymous attendee here who said, Empire's investment in Dacian Limited has delivered quite impressive returns over the period. This being such a lucrative investment, what compelled Empire to sell its holding in Dacian?
Yeah, good question. Yeah, we did very well out of Dacian. I think our profit was about 2.9 million, according to our half-yearly accounts. So certainly you can't begrudge a profit. As they say in investment circles, you won't go broke making profit. Look, it was timing right for us. We did have a view of our business that's been partially or at least in some way form an investment company. The board is, our whole board are investors in their own right, and feel that we've got a very strong capability in that area, and that's reflected obviously in the success of Dacian. The long and the short of it is that exploration is our game, and exploration costs money to be funded, and we couldn't really rationalise seeing a profit on paper with Dacian, and then tapping the market for more funds to drill. So our rationale was we would liquidate our Dacian holding in a timely fashion without obviously affecting anything in the markets, and put that money to good use in 2 things. It was to improve our balance sheet, to improve our balance sheet in terms of cash position, but also to reduce debts that we incurred, and also clean up some of our legacy issues. And secondly, to fund those exploration programs. And while it'd be nice to be having a strong portfolio of investments inside Empire, we have to recognise that Empire is an exploration company. We need to be drilling holes.
And Sean, last question for you here. Nice little quick one to wrap up. Now that Empire has set its foot on the ground at the Nandy project, what is the company looking forward to in terms of the exploration success at the project within the coming months?
Yeah, Nanity's really quite, I guess, an exciting little asset for us. It hasn't had any significant work, a little bit of air core drilling to a RAB drilling to the south and some soils, a bit of rock chipping. But until we got out there and started really putting boots on ground and covering it with which was quite a large soils program for us, it was certainly something that we wanted to do, try and understand a bit more about that project. And we followed up with the desktop studies and field work, that mapping, etc., to identify what those opportunities are. The Broombury Greenstone belt is quite a fertile belt, so we looked at that and thought there's got to be some sort of where there's metal, there's metal. It's a great saying of gold, you find gold where you found gold. So we wanted to be in there early this year. It's a bit of a case of get in line. Accommodation and services are in hot demand at the moment, particularly around the Murchison area. But we would like to be getting into that area. As I said, it's either Barloweri or Nanity, certainly in the second half of this year, with either the air core or more soils. So depending on what's available and what we can do, we just have to roll the punches sometimes as a smaller company. But we certainly have grand plans for that asset, and we would like to be progressing some of those targets that we've identified and also uncovering more. So can't really be definitive, but certainly love to be on the ground. It's a great place to be. It's a great part of the world, and it's easy exploration in that sense.
Well, Sean, thank you so much for answering those questions, and of course for your presentation as well. Now, if you didn't get your question answered, or you've got another one you've just thought of having heard those answers from Sean, just make sure to send us an email, info@kalkinemedia.com. Now, Morris and Kane, if I can get you guys to turn your cameras on as well, we'll just get a final word from each of our guest speakers today. But Sean, given we've got you with us right now, we'll start with yourself. What would you like investors and our attendees today to take away from it? And how have you found the experience being involved with the webinar?
Yeah, the experience has been great. It's great to hear from Morris and Kane as well. It's good to see out there, and I'll probably stick the guys on the watch list and have a bit of a look. I think the format's great, and I appreciate the invite to be on here. Look, I think with Empire, the proposition for Empire is that we've spent a lot of time and effort reinvigorating our business and driving our exploration function and creating a viable exploration business. We've got some great skill sets in our team that we would like to be putting to good use, and we're not going to do that sitting in Perth. So out on the ground, boots on ground, get out there and drill holes, take samples, develop projects, and uncover opportunities. So we've got lots of energy, we've got lots of passion and drive for what we do, and we're looking to improve on the successes we've had over the last few years, and drive that home with hopefully a greater exploration program and going forward. Yeah.
Wonderful, very practical process moving forward. I love that, Sean. Now, Morris, if we can get your camera and mic back on for us, we'll get your thoughts, mate, on being involved today, and also what you would like our investors and attendees to take away from this session.
Oh, well, thanks again for the opportunity to present today. I've certainly enjoyed it and learned quite a bit about the other boys on the call, and certainly got me on a few other things that I'm looking at. I'm very excited about the future for QX Resources. It's taken us a while. We've been very selective in the projects that we've picked. We've got a good diverse portfolio both in Queensland and Western Australia, with gold, moly, nickel, lithium, iron ore, and various others potentially that are in the package still to be found. And we're well funded. We've got a good team. We're still looking for other opportunities, and as I said, we're looking forward to coming home with a wet sail.
Terrific, Morris. Thank you so much. Now, Kane, do we still have you there? I think unfortunately Kane might have tapped out a little bit early today, but Okay, well, that will pretty much do it for us then. So Sean, Morris, thank you so much for giving those final thoughts there, your presentations as well today and answering those questions. I know it can be quite a long session, so appreciate your patience with one another and certainly with myself and for all of our attendees here. It's been really great to get some insights into what is quite an interesting space at this point in time, given what's happening more globally. But been an absolute pleasure to have you here today. And ladies and gentlemen as well, thank you so much for attending. Of course, if there is any other questions you might have, final time, the way to do it, info@kalkinemedia.com. Send that email across. But until next time, that brings us to an end for this edition of this InvestNest webinar series. Of course, all about commodities and the impact of the Russian-Ukrainian crisis. My name is James Preston. Thank you so much for joining us today. And of course, don't forget, you can subscribe to our Kalkine TV YouTube channel. Just head across there to Kalkine Media. And of course, we are live between 9 and 5 each day. Have yourself a wonderful day, and we'll catch you next time.